Ladies and gentlemen, good day and welcome to DC Infotech and Communications Limited Q4 and FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. Please note that this conference is being recorded. Today, from the management side, we have with us Mr. Chetan Kumar Timbadia, Managing Director, Mr. Devendra Sayani, Whole-time Director, and Mr. Piyush Shah, Chief Financial Officer. I would now like to hand the conference over to Mr. Chetan Kumar Timbadia, Managing Director from DC Infotech and Communications Limited. Thank you, and over to you, sir.
Thank you, Michelle. Good morning, everyone. I would like to wish you all a very warm welcome to DC Infotech and Communications Limited earnings conference call for the fourth quarter and the full year ended 31st March 2024. I would start by thanking everyone for being here today and joining us on this call today. With me today is on call Mr. Devendra Sayani, Whole-time Director, and Mr. Piyush Shah, CFO and Adfactors, our Innovation Relations team. Speaking about the company's business, it was established in 1998. DC Infotech has been specializing in providing innovative networking, unified communication, and data security products and solutions by utilizing the latest technology. Over the years, we have been able to establish ourselves as a leading company in solutions, sales, and support of networking, UC, and security products and services. Our core competency are in understanding existing network and future needs. We excel at first understanding the need and then design and deploy an effective functional network. Also adding to that, we have an exhaustive range of POC appliances and solutions for different industry verticals and have done security implementations with major installations in India. I'm excited to share some update about our company and our achievements over the past year before we dive into the details of our business and financial performances. We are proud to announce for the second time in a row, DC Infotech has featured among the top 500 fastest growing companies in Asia Pacific region for the year 2024, as recognized by Financial Times. This esteemed ranking underscores the Financial Times recently released in its 6th edition of FT High Growth Companies Asia Pacific 2024 special report, highlighting the companies that have demonstrated exceptional growth and resilience amidst challenging economic conditions between 2019 and 2023. We are honored to be recognized among these esteemed companies for our remarkable achievements during this period. DC Infotech and Communications Limited exceptional growth trajectory, commitment to excellence, innovation, and sustainable growth in this dynamic technology field, which solidifies its position as a powerhouse of networking and security solutions sector. We have received the highest value contribution award from Samsung for its exceptional work in digital signage. This award was presented at Samsung's award gala and recognized DC Infotech's dedication and outstanding contribution to digital signage field. The award highlights the company's innovative solution and its ability to deliver high-quality services, which significantly contribute to digital signage industry. At MSME Startup Expo 2023, organized by Confederation of Indian Traders, CAIT, DC Info was honored with Udyam Ratna Award 2023. This award is given to companies who demonstrate outstanding services and achievements in field of trade and industry. This Startup Expo serves as a platform for SME startup service providers to network and showcase their product and services. And receiving this award at such a prestigious event underscores DC Infotech's impact and leadership in the industry. This achievement reflects our commitment to excellence and innovation in providing top-notch solutions in the IT sector. We are grateful for the recognition we have received and new opportunities to serve our clients with the best technology and services. Moving forward, our focus will remain on securing more such segments and expanding our presence in those areas with a view to deliver sustained value to all the stakeholders. Going forward, we want to simplify our segmental revenue reporting as our business primarily is divided into three categories: networking, unified communication, and enterprise security business. Now turning to our financial performance. Fourth quarter Q4 FY24. We have reported 154.59 crores of revenue during Q4 of FY24, a 60.74% Y-on-Y rise. Growth is mainly driven by large orders executed in the enterprise segment as well as the UC segment. Our EBITDA for the fourth quarter stands at rupees 6.74 crores, increasing 78.16% Y-on-Y, driven by change in mix of products and brands. EBITDA margin stood at 4.36%, an improvement of 43 bps compared to the previous year. Our net profit for the quarter is at rupees 4.21 crores as compared to rupees 2.15 crore in the last quarter of FY23. Net profit margin stood at 2.73%, up by 50 bps. EPS for this quarter is rupees 3.29. Now for the full year, we have reported rupees 459.63 crores revenue in FY24, a 27.81% year-on-year rise. Due to strong demand in our products like Samsung, NetScout, Netgear, D-Link, Hardware, and other software and services, EBITDA for the full year is rupees 20.04 crores, an increase of 57.53% Y-on-Y. Our net profits during the full year is rupees 11.61 crore against profit of rupees 7.08 crore in FY23. Net profit for the margin stood at 2.53%. EPS for this period is rupees 9.51. This is all from my side. Now we can take questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may please press star and one to ask questions. If you wish to ask questions, you may press star and one. We have a question from the line of Arka Bhattacharya, an individual investor. Please go ahead.
Yeah, good morning. I'm pretty happy with the numbers that we have come across. I would like to know regarding the margins that we are having, we see a increase in margins going forward. That is question one. And second question is regarding the equity dilution. Are you guys going to do it going forward one more time, or are you guys planning to reduce the stake from promoter side? These are the two questions that I have for you.
Okay, Mr. Bhattacharya, if I get your line was not very audible, but if I am getting your question, you are asking about the margins which have increased, right?
Yes, sir. Yes, sir. Sorry for the network connection. Yes.
Yeah, no problem. So the increase in margins has been our endeavor from the day one, and we continue to focus in that direction. And in that line, we are aligning our products with more of services to be bundled in, and the product mix which we are carrying, as we are trying to get it to an optimal level, and so we increase our margins. And also with the scale.
I'm sorry, sir. Please continue.
Hello.
Yes, sir. Please continue.
Yeah. Okay. Sorry, something. So with the scale, we plan to bring the efficiency also into our operations, which has also contributed to the growth in the margins, and we continue to plan to doing that. I think that answers the first part of your question.
Yes, sir. That answers the second part of the question. The first part was regarding the preferential derivatives. You have diluted some of the stake. Are you guys going to do that going forward any further time where your promoters will be diluting the stake?
So promoters are not in the mode of diluting the stake. We have done a preferential thing, but parallelly there has been warrants which are convertible, which have been issued, which will on conversion of warrants will be again back to what we were. So there is no idea on terms of promoters to dilute the stake. As strategically we are doing some preferential issue, but parallelly promoters are equally committed to the company and its organization, and we will continue to keep our stake as of now to the same level.
Okay, excellent. And I'd like to add one final question to this. What would be your guidance would be for the next at least 2 to 3 years?
For 3 years guidance, you are asking me?
Yeah, 2 to 3 years. If not, at least 2 years.
Our vision and endeavor will be continuing this trajectory of growth, 15 to 20% Y&Y. That should be our endeavor and the guidance for the next 2 to 3 years.
Excellent. Thank you. It was an excellent talk. Thank you.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. So I wanted to know how will be our margins going ahead? How much improvement can we expect over the next 1 to 2 years, and what will be the sources?
Okay, Ketan, thank you for the question. And as far as the margins is concerned, if I follow up to the answer which I gave Mr. Bhattacharya, as the scale increases and we continue to bring efficiency into our operations, and thirdly, the product mix of adding services to the products what we are doing, and more solutions offering as we go, we see that the margins improving to a better level than this. And hopefully this trajectory of growth in margins should be continuing in the years to come.
Okay, so can you give guidance on margins, like exact number or a range?
Range, we should be hovering around 3% in 3 plus in year or two to come.
Okay, but thank you.
Thank you. The next question is from the line of Ankur Gulati, an individual investor. Please go ahead.
Okay. Thank you. Yeah, definitely. This is the first time I'm dialing.
Mr. Gulati, I'm sorry to interrupt, sir. Your audio is not clear. May we request you to use your handset, please?
Hi, thanks for the opportunity. This is the first time I'm dialing in for the company. If you don't mind, can you just give a quick overview in 3-4 minutes on the products and services?
Okay. Ankurji, if I may give you an overview. DC Infotech and Communication Limited, we are mainly into networking as a field. Overall, as a domain, if you three domains which our businesses are divided into. One is the traditional networking, which we have been doing over 2 decades. Networking consisted of on-prem to cloud solution, wired to wired solution. Complete range of products and solutions are on the offering. The second domain which we work is in unified communication, where it is digital signage, controllers, and AV solutions where voice and video is concerned. So that is the second, where the convergence of data and audio video comes. So that is the second domain which we work in. And the third domain which we work is into the enterprise security. When we call enterprise security, we do data security, not the video or CCTV type of security. We are purely a data player where we do cyber security, data security, cloud security, internal network data security, and other offerings of the sort. So if I may say, my business is divided into 3 major domains, which have nuances further down into each category. But this is the thing. We have started our journey with networking, so networking still remains a huge chunk of our business, which is approximately 45-50% of our business. The unified communication patch also contributes around 25-30% of our business, and the enterprise security business, which is the latest addition, and as the time goes, it is in more and more demand, has risen to approximately 25% of our KT. Am I able to answer you?
Yeah,
or
that's helpful. Really appreciate that. Sir, just a quick question. The margin profile is, let's say, up 5%. So is this more because of they're buying products from third parties and then just installing them? And as you move slightly more towards services, is the margins expected to improve over the next 2-3 years?
Yes, sir. See, products are not developed by us. Products and solutions are OEM. We are more of an integrator and a solution. We are not a manufacturer. So we have aligned ourselves with certain technologies, and we have aligned ourselves with certain OEM with the niche technology which they carry. Margins are surely, as earlier our journey started with only trading of products, but in the last couple of years we have moved from trading of products to a value-added distribution, now to more of a solution and a service-oriented approach. Surely, as our more and more services factor kicks in, and we get our more equipped with more and more solutions, the margins are on the way up.
Is there some sort of an exclusivity we have with these OEMs where we can work for them, or is it there's no exclusivity with these OEMs when it comes to implementing?
Out of the whole bag which we carry, couple of brands we have exclusivities, couple of brands we have limited exclusivity, and couple of there is a regional exclusivity. There are some certain products and solutions. There are some certain SKUs or certain technology we have an exclusivity, and other products and services. There may not be exclusivity, but the kind of knowledge-based manpower which we are developing, we stand a very favorable position with the OEM to be a preferred partner in terms of the offering whenever they go to the market.
Understood. Okay. All right. Thanks a lot.
Thank you. Participants who wishes to ask questions may press star and 1 now. The next question is from the line of Vishal Vardhan from KPIT Tech. Please go ahead.
Hello, sir. Congratulations on a nice set of numbers. So my question was like, what is the role of DC Infotech products in 2 data centers? Like, can you give a short brief on the services and the product and the value-added service and product that you give to data centers? And the second question will be on the cash flow side. Like, can you comment a bit on the cash flow side and further improvement in it?
So Vishal, thanks. I will take the first portion of the question, and the second portion of the question I would like our CFO Piyush Bhai to able to answer it more clearly. The first portion of the question is for the data center. We have a great offerings for the data center as such. So data center, basically, if you are aware or as a layman, data center consists of two technology, hardware and software. In hardware, there is one compute side, which is a lot of servers and storage, bare metal, AC, and etc. We are not into that space. We are into data center is the basic, the networking, the connectivity, the racks, the switches, the cabling, for portion of it, the routers, the wired. That is the portion we service in a data center. So that completely comes out of our networking patch, what we do. We have offerings of networking switches, cabling, fiber, routers. That is one patch which we are offering to data center. And the second and the most important, every data center now has a connectivity backhaul to a cloud or an internet exposure where the lines come in. And as we say, data center means data. So there is a lot of data which is being stored, accessed. So we, in our enterprise patch, we have solutions for seeing that the data is stored safely and can be retrieved anytime, any moment in a safe and secure way to right persons, and control it from any external threats of corruption or any ransomware or attacks of any type. So for data center, we have two solutions. One is the hardware in terms of networking, and two, the security stack which is needed in a data center to protect its data from all the other sources. So that's the offering which we have for data center. A strong story for data center in terms of DDoS attack, ransomware attack, accessibility attack. We have a couple of offerings which service to this kind of threats available in the market. Am I able to answer you this? So then I will hand it over to Piyush to give you a guidance on the cash flow question.
Sir, one more thing. Can you give me guidance on the growth that you are expecting, particularly from data center segment in next 3 years?
Vishal, data center is the currently booming thing which is needed. With data center, a lot of cloud also has come in with Microsoft and Amazon's and the Google's bring a lot of cloud into play. One side, the Adanis and the Reliances are the Iran and others with Yoto are on the spree of putting the data center. So it's a hybrid of data center and cloud which is going to play out. And current tussle is going on. As the technology evolves, let's see how it plays out. But growth in this patch, either way, if it goes this way or that way, we are there in both for the patch. So we should be benefiting from either way the technology takes a curve. And this patch inside is as we started our journey into this enterprise security late 2018-19 sort of, and has been now it comes to around 25% of our business. And going forward, we see that pie increasing overall in patch because it is one of the fastest growing patch in our business. So yes, overall this patch is going to grow, and hopefully it will be one of the predominant patch which will be in our kitty.
Okay, thank you.
Piyush, can you help him with the cash flow question which he had?
Yeah, thank you, Chetan bhai. Regarding the cash flow, there will be an improvement in the cash flow because of conversion of warrants by the promoters, as well as improvement in the margins.
Okay, that answers my question.
Thank you.
Thank you. The next question is from the line of Ashok Jain, an individual investor. Please go ahead.
Hi, sir. Good afternoon. So if we see our working capital has increased, our working capital cycle, could you throw some light on this, please?
Okay, Ashok ji, you have seen an increase in working capital cycle. That's true. It comes on as you are comparing it with the previous set of numbers. as we have come out of COVID and post that 2021-22, COVID was the cycle. There was an era of shortages and era of cash and carry mode. So the working cycles were very shorter and briefer. The payment cycles were there. And now we are back to normal. So the corporates, the customer, everywhere, now the normal default credit period has kicked in. So that has elongated our working cycle. And secondly, the most important factor onto this is earlier we used to have trade in maybe the deal size with small ticket size. As we are growing, the kind of solution and kind of offering, kind of projects which we are taking are bigger ticket size, couple of crores are there. And one, it is an elaborate solution. It is not a one-off trade, a lakh rupee material which we give a solution and we take the money. That cycle is much faster. When it is a couple of crores, lot of components, lot of complexity goes into that. And when that complete thing is delivered, the payment cycle kicks in. So because of that, there is a stretch on the payment cycle because the execution of a project will take a couple of lakhs project will take a faster and a couple of crore project will take a much longer time. And because of that longer time, the working cycle has increased.
Okay. So are we in the future planning to raise any funds for our working capital?
As the time need, we will be approaching as the business demands. As I cannot crystal gaze into the future, but yes, if need be, as the business demands, we are open to raising more funds from bank or maybe via preference or whatever. Whatever the rights fees, board fees, we may raise.
Fair enough, sir. And sir, if could you also share that which are our top three brands in terms of revenue and what is our dependency on them?
Top three brands,
The percentage of our revenue. Basically,
okay.
To understand the dependency.
Okay. Top three brands, in each patch, I would like to segregate it into. And UCPath, Samsung is our the biggest contributor because its solutions are the offerings which we do. Out of 25-30% of our business, Samsung in that patch, Samsung would be around 15 to 20% contributing out of that. So that answers in the networking patch, Netgear, which we are exclusive distributors for Northeast and West of India, contributes around 50% of our patch. 45-50% in that patch. The third, enterprise security, NetScout and Arbor are visibility solutions and DDoS security solution is 60% of that patch which we offer.
Okay, understood, sir. And just one last question: what is our current order book, and how much has it grown compared to previous year, and how do we see it going ahead?
So, going to the order book question, see, our order PO to execution is a very minimal cycle. So, there's nothing more of in other industries. They may have a elongated getting a PO and manufacturing something and deliver takes maybe couple of months to couple of years. For us, that is not the case. Our PO to delivery is within maximum a month or so, because but we have a good funnel which we have quoted and cases which we are working on. So we measure ourselves on the funnel, because once that funnel materializes to a customer PO receiving, a delivery is fast. So answering order book in terms of PO and to be executed will be quite small compared to the funnel which we are carrying is decent. It is approximately around 40 to 50 crores which we are already quoted, and the order should be coming through maybe in this month or the quarter next. So order book is not very relevant to our business.
Okay. So, and if I could just ask one last question, it's how do we differentiate ourselves from our competition in this space? That like in our entire landscape that we operate in, what is like the competitive edge that we could have?
Okay. The landscape which we operate in, I don't see any similar size peer which we have. So that is the very good advantage. We have some peers, but they are something who do similar work are very large, like maybe a Tata Communications size of thing, or a Hitachi kind of, which are a couple of 1,000 crores organization. In the patch we are, which are a couple of 100 crores patch, there's no apple-to-apple comparison which we have. So that is the one edge we have in terms of market presence. With this comparatively smaller size, with the elasticity and the flexibility which we bring to the customer in terms of offering services, is something which a customer would like to do. And good to have, sorry. And secondly, what will be our edge in that? We, in any domain, whatever we do in a product, it is always a value addition. So a simple networking product like a router, you can buy it from, which we don't deal, but for an example's sake, I'm just explaining it to you. For an example, if you want to buy a router for your home or an office, you can go to Amazon and buy one. That's the very simplest way of doing it. But the second, what we are able to do, if a person, you dial into our sales guy or our office, and if you say router, then my guy is trained to help you and guide you to buy what you may ask you, what is your office size, what is your requirement, how people are going to log in, what is the speed you are looking, what is the internet size you are looking, and then give you a final solution that this is something which is recommended to you. And to top it up, there are guys who can help you to install and support it. So the complete cycle from a buying guidance to support in terms of installation and later the support, which we have a unique feeling across the categories, whatever we are servicing, all brands, all technology. We have a team, the sales team who is technically qualified to guide you, and the support and service team to back it up. So this is something which is very unique as a proposition to our customers, and this helps to keep edge ahead than the rest of the peers in the any domain which we work in.
Understood, sir. That's all from my side. I wish you the very best. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Manoj Rajani from Rajani Family Office. Please go ahead.
Hello, am I audible?
Yeah, Chief.
Yes, sir.
Yeah. Hi, sir. First of all, congratulations on a good set of numbers. And also, so basically, sir, wanted to understand that, in during our last con call, you had mentioned that, the goal of reaching rupees 1,000 crores in revenue within the next couple of years. So just wanted to understand, how close are we to achieving this target right as of now, and what are the primary drivers behind this growth?
Okay, Manoj, glad to have you back, and you remember what I had spoken. So I would love somebody like you, sir, following up on this. So to answer your question, the 1,000 crore mark still stays on the horizon. And if you say how close, we are halfway there. And I hope in the next couple of years we should be there in there. We have a plan in place to see. And let's see how fast we are able to execute it in a more profitable way. But yes, the 1,000 crore plan stands on the horizon, and we are firmly committed to reach it. The time duration may be little here and there, but that is on the horizon.
So, sir, by FY26 or maybe the 2 quarters more, we should be able to achieve it.
FY26 would be my dream target. But our endeavor is there. We are in that endeavor to go towards that direction. I would not be able to commit you on FY26, but yeah, my heart would like to do that in that direction. but maybe one or two financials here and there. We will be there.
Certainly. And so, sir, you had emphasized that interactive panels are poised to become a significant growth opportunity as well. So particularly in the second half of this year. So could you quantify the revenue potential that we see from that particular segment? And additionally, could you also provide some insight on that? If we have any, if we have been in any customer discussions or the order pipeline that it currently holds.
Okay. This is what I had updated you in the last earnings call. Interactive panel is here and in a big way. We have done a couple of 100 units for one of the state government in the last financial year. But as you know, last 6 months, government was in a shutdown mode of not investing anymore, which hopefully yesterday everything has been extended cleared. So interactive panel coming in this year is going to be a very big driver from the government side, because the education is one of the big field where government is investing, and it has to. So there we should be seeing good traction. As far as interactive panel on the enterprise side or the corporate side, the adoption is going in a very decent way. More and more organizations are using it for their boardrooms, meeting room, huddle rooms, and a lot of other methods are being used. So, yeah, we see that contributing to a decent, maybe 30 to 50 crores this year, interactive panel into our kitty.
All right, and what was it in the last year? FY24?
FY24, if I would say, it was one decent big order, and maybe this is very offhand, but I will give you a range between 8 to 12 crores.
Okay, sir. Fair enough. All right, sir. That's it from my side as of now.
Thank you.
Thank you. The next question is from the line of Ashna Joshi, an individual investor. Please go ahead.
Hi, sir. Good afternoon, and congratulations on good set of numbers.
Thank you.
I just wanted to understand in terms of our competition, that is Creative and Redington. So how do we, differentiate ourselves from our competitors? And, that's something that I wanted to understand.
So, from our competitors, you mentioned Creative Newtech and Redington India Limited.
Right.
So, ma'am, we are not, if you say maybe size-wise, we are nearly there or little smaller than Creative, and Redington, we are a very small compared to it. Creative, and we are not into that same domain, ma'am. Creative is more into product selling. It is more of a offline version of an Amazon, which is doing. It's a couple of technologies and brands which they are carrying. They do the distribution across the nation. Their strength is distribution. While our strength not lies in distribution, our strength lies in solutions and servicing the products we carry. They don't do that. So that's the differentiator. They are good at moving the material to the various location, reaching out to the last single user customer. We are more of a corporate or a B2B type of business. So that's the differentiator with Creative. And Redington again is a mega version of Creative. Redington lies in strength of its network across the nation, across the globe. With the financial strength and the muscle they have, they do lot of mobility in terms of Apple and Samsung, which out of that 40,000-50,000 must be contributing 20,000-30,000 of that turnover, and a lot of other IT brands also. So large brands who want to just reach out to the nooks and corner of this nation would use that Redington route with the type of network and the financial strength are there. So we are not in direct competition or a peer sort of that. But yes, you would see that if you are able to see what Redington has been doing are trying to achieve in last couple of years. They have been trying to build some solution and services factor to what they are doing and trying to add. That's because this is the way forward which they have also realized. And we are rightly in that patch. We are already there doing that in that patch. Size-wise, not comparable, but yes, what we are doing, Redington is trying to do it. Will they be able to do it with their size? It's a big question mark because elephant tongue takes time to turn, and maybe. But they are not our peers. I would not like to, in terms of technology, size-wise, yes, maybe you can have a look at it.
So, sir, in terms of technology, who do we consider as our like-to-like peers?
None, nothing much in the listed space, which we have. Since, as you must have heard already, I had explained it to earlier gentlemen, we are working into 3 domains. So, there is no apple-to-apple company which is available with us exactly for this domain. There are non-listed private limited players who have either 1 or 2 domain in their kitty, and we compete with them, but nothing in the listed space, ma'am.
Okay, sure, sir. And so just wanted to understand our revenue mix in terms of our customers. So who will be like our top 5 contributing customers, and what kind of revenues do they contribute?
Top 5 customers, if I go by the last year, since in the security patch, we do a lot of high-end solutions. And these high-end solutions go to large organizations, I would call it Nifty 50 type of organization, the banks, the financial institutions. Since we are born out of us, and that is our strength, the NSEs, the BSEs, and this kind of patch is mainly they have their consultants in place, like a Deloitte or a KPMG or a TCL or a entity or a Hitachi type of. So what happens is the complete solution or the takeaway is given to one of them, and the security patch is then carved out and handed over to us because only they don't have that expertise to execute it and deliver it. Then we come into play, and out of the whole project, that offloaded portion of security is being done, supplied, installed, and serviced back and from that whole patch, which this kind of working happens in every in infra, road, etc., everything. So here, if you say my top 5 customer, in that TCL was one of our biggest customer. Tata Communication Limited was one of the biggest customer in the last previous year. Hitachi was one of our biggest customer in last previous year in the security patch. And in the product patch or the networking patch which we do, there we have one of the partners out of Delhi who does a good business for us. And for the UC patch, we have done some decent size orders last year, which were mainly for museums across the nation, which and Sansad Bhavan. And so with the partner who has picked up for new Sansad Bhavan and the museum, we have done quite a bit work for them. So you may, if you have the privilege to visit Sansad Bhavan, you will see a lot of LEDs around there, and that work has been done by us. So,
so what kind of revenues would they be contributing? Will we be able to like bifurcate that? Like how much percentage of the revenue does it contribute, these top customers?
I will not be able to give you top 5, but our top 50 of them will be contributing around 40-50% of our business.
Top 15, you said, right?
Yeah, top 15.
Sure. Okay, thank you so much, sir, and good luck for the day.
Thank you, ma'am.
Thank you. The next question is from the line of Harshal Patil, an individual investor. Please go ahead.
Yeah, hi.
Congratulations for the good set of numbers, and thanks for the opportunity. I have few questions. So do we have a plan to raise the funds for our working capital?
Harshil, I think I had answered it earlier, but for your reference, I will. Yes, we as of now we have funded, but going forward as the business demand needs, we are open to raise more if our business needs, because we are committed to the kind of growth which we have already given as the guidance. And obviously, without funds, nothing would happen. So we as a board are open. Whenever the need arises, we will raise to fuel the growth.
And what percentage of our revenue and margins are derived from the hardware and the software segment from FY24?
FY24, hardware is 80%, 20% comes from the software and services.
Okay. And could you provide a current breakdown of our revenue by business segment? What are the margins for this segment?
So, business segment, as we are working into three domains: networking, UC, and enterprise security. The networking patches are approximately 45% of our business. The UC business comes around 25-30%, and 25% comes from the enterprise security patch. The margins in the networking patch, what we call it, is around hovering around 5 to 7%. In the UC patch, it is approximately 7 to 8 or 9%, and in the security patch, it is double digit.
And what is our important key drivers for our revenue and EBITDA margins? Are we planning to work on the new areas of development in our businesses? So do we have any update on expanding our businesses in overseas market? As you had mentioned, potential plans for the expanding outside India. So can you share more details on any progress made in international markets and how this aligns with the company overall growth strategy?
The expansion plan is very much under board. This year we have just moved to the southern India, which was we are not present. So we have just set up our operations in southern India. The team is in place. So this year will be the focus in southern India. Overseas market, we are studying it, and once the time is right, you should be hearing from us on that also.
Okay. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Alka Bhattacharjee, an individual investor. Please go ahead.
Yes. Sorry for the follow-up question, which has already been answered. I just would like to know what is the breakup in terms of software and hardware. In your last con call, you have given the breakup. But what is the breakup of the software and hardware in the FY24?
It's the same thing which I told. 80% is products and 20% is software.
Okay. And another one question would be, sir, the number of employees, how many employees are working for you? Is everyone into sales, or do you have people in development as well?
Okay. We are approximately 70 plus team, and it is mixture of everything. It is not only sales, support guys, the engineer, the technician, and obviously the finance and the admin team. Now all put together, we are 70 plus.
Okay, because you have mentioned in the last call also that you have a very specialist skill set of work or orders that you are getting. So I was just wondering if you have a very vicious set skill developers in your team as well.
I didn't get your question, Mr. Bhattacharya.
I wanted to know the kind of skilled people that you have in your development team. Do you have any developers who are working on this?
So we don't do in-house any development. We deploy solutions and products. There is no actual software development for other. We are installers and service providers for that. If I give an example, SAP is, we don't do SAP, but as an example, I'm just, SAP is a software, but there are installers and partners who will customize the SAP for you and install and support you. Similarly, we have some technologies which is a modular security products. According to the customer requirement, we will suggest you that modules which will require. We will help you to install it and then support you and configure it and support you on that software. So there's nothing like development coding type in our business. It is more of configuring the existing product.
Okay, so you are mostly people from networking, IT specialists and that kind of.
Yeah.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Akash Sharma, an individual investor. Please go ahead.
Hi. Yeah, am I audible?
Yeah, you are audible.
Hi, sir. So my questions are on financials. Sir, can you tell me that what all factors contributed for the growth in revenue?
What factors contributed? Everything, all the domains contributed, and everything was going. Akash, if you are able to rephrase your question, it will be helpful. What has contributed? There's nothing specific, one thing which has contributed. All of the products and technologies have grown, maybe some percentage here and there, but everything has grown in rapidly.
Okay. So, the sales, if the sales has grown or any new regions has been expanded?
The sales have grown. Region expansion is for this year. As I mentioned to the earlier gentleman, Southern India is something which we are going to tap this year.
Okay. Thank you.
Thank you. The next question is from the line of Vishal Vardhan from KPIT Tech. Please go ahead.
Sir, I can see that the security software and the services segment for this particular quarter had a very good growth of 40 crores compared to other quarters where it used to be between 10 to 20 crore range. So was there any particular reason for this growth in security services and software? And will we have this growth continued for next year, every quarter, something similar in this range?
Vishal, I would love to be there in that, but some orders which were supposed to be executed in OND because of the Diwali patch, they got pushed into the JFM quarter, and because of that JFM quarter, you see a big spike. This kind of numbers may not be the same, but our endeavor is towards that direction, and we are working on a couple of good funnel, and hopefully we will be able to manage around that size of numbers in this year also, every quarter.
Okay, wonderful. Thank you, sir.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Chetan Kumar Timbadia from DC Infotech and Communication Limited for closing comments. Over to you, sir.
I would like to thank the entire team of DC Infotech and Communication Limited for their continuous effort, hard work, and dedication which strengthens the company's resistance to the various market cycles. Also, I appreciate all of you for participating in this conference call. Please do get in touch with our investor relation team if you have any further follow-up questions for this. Thank you. Thank you everyone for joining. Thank you, Michelle. Thank you, Rupesh, for arranging this.
Thank you, members of the management. Ladies and gentlemen, on behalf of DC Infotech and Communications Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you. Thank you, sir.